Hello traders, how are you? Vladimir here, and this is the weekly forecast for the first week of May 2016. Happy Easter to everyone who celebrates that. I hope you have a wonderful time with your loved ones and your families. So what do we have for this week? Let's start with the New Zealandian pairs, which are interesting. But before the technical view, of course, let's quickly go over what we have on the fundamental. Let's start with Draghi's speech today. And it continues with actually warming up by Friday. On Friday we have the non-farm payrolls, and the market is looking for any possible hint from the Fed or from the American data about what's going to happen next with the dollar, mainly because that's the main effective factor, of course, on the markets. So until then, let's now back to the technical, and let's see what do we have. New Zealandian dollar still like here, okay, still on a bullish area, still might complete this idea, still might do this kind of triple cycle, while each of the triple legs, it could be triple by itself. So this could be like this, reach this area, create and complete the divergence, and then cause the central bank of New Zealand take action. And last week they did give a hint that they might act whenever there will be a reason to act. Last time they did keep the rates, but they said they watch it closely and they will not accept very high price, especially not with the whole market conditions. They still keep it pretty high, so the higher we go, the stronger the pressure, the faster the drop will be. So what levels we could see the rally going to? 070, this resistance area slightly below than 072 is definitely one area to watch, and there is one area right here with a gap not closed next to 075. Could we get this area if we go and observe the weekly double cycle we have had right here? That's the first area, okay, slightly below the 072, the same resistance I have been talking about. And this is the next area, that is the 50. And here we can say the 075. Is that doable? We reach there? The answer is yes. And the higher we go, the stronger the intervention will be. Now we have a potential bearish divergence developing here on a daily chart. It's only a question of time when it is going to take an effect. Until now, every divergence get us for a drop back to the 20 MA of the Bollingers and a pullback. So it means that the divergence is not strong enough yet to change the game completely. So that means we could still rally slightly higher. Now on a weekly chart we don't have any divergence forming yet, but if we can keep going, get it higher, this is going to create for us a divergence here, and probably even here some kind of bearish hit. Now it was bearish hit and divergence on this place, but it all came after bullish divergence first and in the end of the cycle. So this divergence is irrelevant after one leg. It is relevant after two legs, and that's why this leg right now is so important. So making long story short, every drop is for now, and while the big daily trend line holds and the support area here holds, every drop we can get is yet an opportunity to join the buyers and try to ride the rally to the levels mentioned before. That should be pretty nice opportunity. Euro dollar, also same story. From my point of view, we are yet about to see higher areas. This is the double we wanted long time ago, back to 117. This is one cycle we have right now as well. This is a potential bearish divergence. So as long as it didn't complete, which means bearish candle, bearish change of the slope, like if it ticks down, that will be a bearish divergence. But as long as it didn't complete and create, we are under bullish pressure yet. And if every drop we can get, okay, something like this, should use us as opportunity to go and try the buys, aiming what? aiming the 116, 117 area, which very likely after that will turn to be a potential sell area. Same like the New Zealandian central bank, same with Draghi. He will act if there will be time required. And as long as the Fed didn't give clearer hint about when they plan to raise the rates, anti-dollar movement is here to stay. Pound dollar, same story. But the good thing with the pound dollar, it did complete the first corrective cycle, like here. Okay, we are dancing around this area. Now the worrying thing is that there is no divergence, so that could easily make the straight continuation toward 150 and the big trend line we have from there, actually like this. Okay, so something approximately to this area, and that could be 150 and higher. Now there is a bearish hidden divergence potentially forming on a weekly. There is no bearish divergence on a daily. So every drop is yet a buy opportunity. This is a trend line to hold on the short, on the mid-term actually. On the short term, I'm not sure how strong this trend line is as for now. So what we might get every attempt for a rally, we get a correction, and a correction we are after buys. Now the correction could be any of cycles options, could be 2, could be triple wave, but they have to mirror the last legs. Mirror means pretty much the same angle. That's the idea, okay? Aussie dollar is also yet under correction. Now for Aussie dollar, it's a bit tricky because we didn't get not 5 wave moves, not triple cycle down. So if we can get like this, that would be a great opportunity then to start and look for sells, because it will give us the triple cycle down, correction, and then continuation all the way lower. As long as it didn't do this situation and this thing, there is a very big chance that we will go for third final cycle to above 080. Okay, so this is a trend line that it still holds, and that's why I would not long here, of course. But we have to see what is going to happen after this expected double cycle. That's the trend line. So if we hold here and break down, we are after third leg of this cycle, and break below here would give it a final call. Then sell rallies would be our plan. But if it keeps rallying from here and just break it, it will be switch for buy ideas, aiming all the way for potentially 080 or so. Now dollar yen is yet bearish. Nothing changes here. Every rally still would be opportunity for a sell. We don't have divergence on weekly combined with daily. The daily divergence is not here anymore. Last week I was after the idea that we might get this, but we didn't have even a chance for a buy. It was just straight drop, and we always look for bullish divergence with 2 waves or 3 waves corrections, and we didn't get it for none of the yen pairs. Therefore we are still yet on a bearish cycle. Every rally is a sell. We might get going to the area of 105 easily, and maybe even to 100. Now the thing with the yen pairs here is Central Bank of Japan will have to act. The only question would be when. So far they say they don't see any reason, but continuing trends from the Japanese currency will make them intervene. Either they will want it or not. So the lower we go, the stronger the buy after that to watch for, and that is for all the pairs. CAD yen, a pair I am still bullish on my mind about. This is a trend line, and as I said, every time we get closer to the trend line, we will start to look for potential buys. Now on a 4-hour chart, no divergence yet. So if we can get 2 waves pullback, it's a sell. Sell could take us again to 83.50 or so until we recreate a divergence. On the 1 hour chart, if we get 2 waves pullback, it is a nice sell opportunity, or a triangle instead, or something like that. And we can look for another push down, maybe a triple cycle like this. 83.50, 83 zone, back to the daily trend line like this. And then we can look for, again, don't buy, look for bullish divergences and retrace reversals for a buy. Once we get that, that's a nice sell. Same with Euro Yen, which I still think is able to take us to 118, 117. For me, it is yet bearish. And what I will want to get is 2 waves correction, 2 waves pullback. So 1, 2, 3, 4, or bigger, 1, 2, 3, 4, and sell. No secrets. Okay, that was and remain the plan here as for now. Now that's, I can continue with all the yen pairs. No need, they all represent and give the same opportunity. Quick view on dollar Canadian. Nothing changed there as well. It is dancing around the buy zone. It could be any of the figure numbers like 125, 124, and even down to 122. That is yet doable. We can still easy get it going lower, completing band to band with half move more, but the lower, the stronger the bullish pressure will take it over, and then the stronger the reaction would be. We will get it going again towards 132 up to 136. The only question here is time and timing. So what I would suggest for those of you who want to play conservative, wait for a trendline breakout. Trendline breakout should provide some bullish convergences, even if it's on lower time frame. Okay. Once we do get them, we can look and talk about potential buys. Until then, let it go. The lower we will get it, the stronger our buy will be. USDCAD also completing 2 wave here. Correction. Okay, getting us back to strong zone for a potential buys. Now there is no bullish divergence yet on a daily chart, therefore we could still play it on bit lower areas. That could be, if we take a look on the cycles as they are, that could take us all the way to 094, maybe even slightly lower, until we recreate the divergence. So on the short term, rallies in 2 waves or false break above this resistance around 096. False break means up and break down. We can look for potential sells until the bullish divergence takes place and recreate itself. Then we can switch for potential buys. That there is a bullish hidden on the weekly, so what we need is a confirmation from a daily, and then we can switch it for longs. Alright, that's about these pairs. So far, pound New Zealandian, my view did not change, still bullish. The only question from my point of view remain open is, are we going for a boost from here to 08 zone, or are we still going to get the 201 or 2 area before we switch? From my point of view, I am looking for buys, so what I need is one more push down, bullish divergence, and to switch for a buy. My view didn't change, but if it continues trade, then the next attack is going to be same zone we've been talking about, not once, not twice, 201, 2, maybe even slightly lower like 198, but the lower we get it, the stronger and faster would be the reaction, and we will get it going towards 225 approximately, of course. So keep an eye on this one. Pound Aussie, same story. I remain bullish in my mind here. Of course, one push we already had. I believe we will get one more. So if we can get corrections, that should be the next view, the next movement back to these trend lines. So corrections, and we are after buys. This is the idea here for this kind of opportunities. Right? No. That's basically all. Nothing changed so far, and we keep it on a watch list. Again, corrections, and we are after buys again. All right, that's here. Now silver and gold. They are approaching for a great sell opportunity, and here is why. This is the first zone we are watching. We got first move, range, and here we are. That's slightly above 18. That's 1830, 1850 approximately. We are already on an extreme. We are already creating continuing divergence. Let it go. And right here, with the next divergence to form, look for a sell. We are about to complete also triple cycle there. Okay, like this. On the last leg of the rally, and this is going to be probably also triple by itself. That's the sell area. How far could that drop? We will have to measure entire movement like this, and back to 1650 or so would be our opportunity. Same with gold, which is approaching for its great sell zone above 1300, of course. That could still take us like 1315, 1320 or so. Still doable, still acceptable. We are, after this was the first leg, we got this correction. Now, how we measure here or here, it will not change much because the zone will remain same. That's 1350 and it's surrounding. If you take it a bit lower, it's gonna be 1340. It doesn't change much, so don't waste your time on trying to guess where exactly here. This is the idea. That's where the first move stopped. After that we get kind of a range here. That's where the second move started from, right? That's why we measure it like this. So 1350, and this is its area. Slightly lower, slightly higher, doable. Wait for the next divergence to take place. That is going to be our sell opportunity. Next one on the list will be the S&P. Now S&P, as long as this stop holds, yet I am it after bearish, but for bearish I will want to get one more push down. So if we get 1, 2, 3, then it's perfect. Then we can get 1, 2 correction, and we are after sells again. If we don't, that could be just a double wave and continuation sign. And this continuation sign, if it really will be like continuation, will take us for new highs, maybe even to 2200. I am still bearish in my mind, and get kind of confused here, but we will have to watch it closely. Okay? So I want one more low, then rally as correction, and then sells are back on track. So that would be all for today, and for this week I covered basically all the opportunities I have as I have them on the list. Just remember, don't rush to click the button of the sell or the buys because it looks good or it reached levels. No, once we reach the zone and the levels, look for setups with the strategies you use, even if it's moving average crosses, trendline breakouts, patterns, whatever it is. I don't care what strategy you use. Let the market reach the levels first, then and only then look for opportunities. Okay? Rushing isn't a good idea, especially on the non-farm payrolls week. So get yourself a good patience, and remember, patience always, but always pays off. I guess Warren Buffett does know what he is talking about when he is saying that the branch we are sitting on today is there thanks to someone who planted a tree 20 years ago. That's a great quote which always goes with me. Remember that. Okay? I don't tell you hold a position for 20 years, but I tell you that patience is a key. If there is no setup, it means the market is not ready, you trade it. Okay? Remember it. Okay? If there is no setup, machines are taking over and control the market. Do you really want to try and beat a machine? No, right? It's like trying to steal $20 from bank, big bank, with security, with a toy weapon. It will not work out. So don't even try. That's what I'm trying to say. Anyway, said enough for this week. Sorry for the weekly forecast came on Monday and not on weekend as it does come normally. But as you know, I was away, couldn't upload it, and couldn't record it actually. So I'll see you around, and thank you for watching. Thank you for your time. As always, if you have any questions, write them down. I will reply as soon as possible, of course. If you like it, click the like, leave your comment, leave your feedback. Your feedback, my motivation, and if you want to share it with anyone you believe can have any kind of benefit by watching this video and maybe learn something, feel free to do so, and I will be very thankful for you for that. Thank you for your time. I wish you a wonderful week, great trading. See you soon. Yours, Vladimir Ribakov.